You think there's a certain type of investor who's attracted to shorting?
You do have to be a little bit of a sicko. Apple traded at like 5 to 7 times earnings when you backed out the cash. When people buy Apple product, they're buying the software mostly.
That's an interesting example.
Ballantyne gave us 20 million to start. Now we have 155 or so, which is, kind of rare to have a bunch of kind of like 30-year-old clients in the RIA space. Our biggest winner of the last few years was this company, Airtel Africa. The business has gone from 100 million US of EBITDA to it's going to do like 750 or 800 million US of EBITDA over the past like 6 or 7 years with no down years.
How you invest with Bireme and like what you found to works for you.
I have this theory that undervalued stocks are caused by cognitive biases. All these quantum stocks, which I personally think are going to zero.
Obviously, AI is all the rage for good reason.
There's companies where they have like a crappy little consulting business and they're trying to like slap on an AI label and then the stock goes up like 5x or something, but it's not really real. Intel is up like 5x. I don't know if I'm convinced that that should be adding like $400 billion to Intel's market cap.
This podcast is sponsored by the Capital Alliance Mastermind, a private community where fund managers share deal flow, build relationships, and grow together. Join the waitlist in the first link below.
Hello, everyone. Welcome to another episode of the Capital Alliance podcast. I'm really excited to have my really good friend, Evan Tindell. Known Evan a long time. I think we first met was it ValueX or?
I think it was ValueX Berkshires because I hadn't gone to the one in Switzerland yet at that point. So yeah.
I actually just recently, I think it was in Omaha. We both just finished the first Berkshire Hathaway meeting in Omaha where we also had a Capital Alliance event, and I ran into Ethan, who did ValueX Berkshires.
Yes.
And that was like more than 10 years ago. And I said, Ethan, I think it's time for another one. And he kind of smiled and he said that he's going to do it. It sounded like that to me. So
no, I told him the same thing because he actually still, he does these like salons, he says, he does doing events all the time. I think they're usually like focused on a particular like research topic, or like he's doing one I think on like longevity research in Boston. So yeah, I told him I promised I would make him a list of people to invite to the next
he's definitely like a very broad thinker,
totally
with very broad interests. I find it really anyway. So we start this podcast typically by covering our guests backstory. So I guess I'd love to know where you're from, what your formative experiences were growing up, where you grew up, what that was like, what your family was like.
Yeah, I grew up in South Florida, Boca Raton specifically, which is a great place to grow up. I used to think that no one had heard of it, but then I found out that like Jerry Seinfeld's parents, I think, are from there. So
exactly. Well, they retired there.
They retired there or something, or lived there. Yeah. What I didn't realize was that it's actually like the one of the world capitals of fraud. Believe it or not.
I do believe it because South Florida as a whole is a.
But even in particular, Boca Raton, it's like incredible. I was watching something the other day, and I actually used to send my mom, when my mom was still living in Boca. I used to send her emails. I would forward them every time there was like a fraud related thing with Boca Raton. I would send it to my mom, be like, "Look, Mom, another like FBI is raiding this company that's headquartered in Boca, blah blah." But obviously, I wasn't involved in any of that. Had a very very nice upbringing. The schools are pretty good. Florida school, I think. The state of Florida doesn't have necessarily the best schools, but the schools in Boca are very good. And so, yeah, I had a really nice little neighborhood. We would all just go down to the park and play every day. So that's very great upbringing. Played a lot of sports as a kid. That was like my, and it's funny now because now living in the Northeast, if it gets too hot in the summer, people will start saying like, oh, maybe the kids should be inside or blah blah blah. But like in Florida, there's no, like, for example, there's no indoor tennis courts. So like it's 95 degrees. You're just playing outside. So yeah, that's kind of where that's where I grew up.
Is
And
that because your family were originally from there, or they moved there from somewhere else?
my family actually is, there in Florida. There's not too many families that are really like from
Exactly.
Florida,
Yeah.
but my my parents both grew up in Florida, which is rare. Yeah, my mom grew up in West
Oh,
Palm Beach.
interesting.
Yeah, my mom grew up in West
Yeah.
Palm Beach, and my dad grew up in Miami. My dad, yeah, he actually grew up in like kind of a not great area of Miami.
Yeah.
He said like he would always talk about how he had he grew up in a real tough neighborhood, and there was two there was there was two like welterweight boxing champions that lived in his like on his
Mm.
block or something.
Mhm.
And so yeah, my dad has a wild background. Like before he met my mom, he spent like he spent I think 5 or 10 years in South America working for a company that may or may not have been CIA like adjacent.
Wow, really?
Yeah, he has
That's the family lore, huh?
that's I know. Yeah, it's like one of those things where he worked for like a economic consulting firm. First, he worked for like a small airline. Then he worked for an economic
Uh-huh.
consulting firm, supposedly um, like gathering economic data on these countries. Like it partially was in Cuba, and it partially was in another place. Um, but like I got the vibe from his story. I mean, he's passed away now, but I got the vibe from his stories that like either he I don't I got the vibe that he wasn't officially working for the CIA, but like someone that he was passing the data on to was like involved with the US government in that sort of capacity. I don't know. He has some story where my dad was pretty tan, but like obviously I mean I'm quite white, but he was a little bit tanner than me, and he had some story where he was in the capital city of some South American country, and supposedly some people from the local government were looking for him to like beat him up or something. But they instead of finding him, he was blending in with the Latinos in the restaurant. But they grabbed two Swedish guys who were there, supposedly because they thought they were my dad, who was, I guess, some type of spy. I don't really know. And they like, and my dad watched them like beat up these two Swedish guys that they found in the restaurant,
Oh, okay.
thinking that was the Americans that they were grabbing. So my dad
Wow.
has all kinds of weird stories like that. So it's definitely my plan one day to file like a FOIA request and try to get like his info. If I don't know if that's
Uh,
I think that's possible, right? Like
Maybe, I guess so,
I
potentially,
don't know if the
yeah.
government reveals old CIA agents
Uh,
if they've been dead for like 10 or 20 years, like, or is that I
I
don't.
think things eventually get to be classified, I assume,
Yeah,
but I
so
don't know that for a fact, yeah.
at some point I want to kind of go back and but so yeah, my dad also my dad was an athlete. Like he was in the Coast Guard. He boxed in the Coast Guard. He played football. It was like he 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 was like part of the tryouts for the Miami Dolphins when the Dolphins were like first coming to, this is like probably 1962 or something,
Oh, wow.
when he was like in his early 20s. And so
Uh,
and then he played on some semi pro football teams.
are you a only child, or you're,
Only child of my parents. So I have a half brother, um
okay. So
who's
did that
he's set 17 years older. Yeah.
did your dad's athleticism inspire you? Because you're a good tennis player, right?
Yeah, I mean, I don't know if it. Yeah, I'm not sure if it necessarily it inspired me. Well, I mean, he was we were I was always playing sports with him. So like we had a ton of fun. Like he would throw me like we would just go out to the park that was like down the street from our house, and I would like run routes, and he would throw passes to me. Actually, he continued doing that. My dad continued doing that almost until he died. Not with me, but with like he would go to the park with a football and just like throw like have little kids have like 10 or 12-year-old kids like running routes, and he would be like throwing even when he was like in his 70s.
Oh, wow, fun.
Yeah.
Yeah.
So it definitely, athletics was always like a big part of my life.
Uh-huh.
My dad used to the one thing was that my dad didn't want me to play football or box, which are his two sports.
Okay.
So
Why is that?
because he got injured. He got injured so many times.
Uh,
Like and back in his day, like you had to play defense and offense.
right.
And he got really beat up. His knees were completely shot.
Uh,
As he got older, like I remember he had so many surgeries, and like at one point he was injecting stem cells from rooster combs, like
really?
the thing on a rooster's head, like and so yeah, he never wanted me to play football
So,
or
how did you get into tennis?
yeah, I got into tennis. I mean, my dad claims that, or he claimed that it was like that he kind of pushed me in that direction after doing like some type of analysis of like money to be made slash like incident slash like injury risk and like whatever. Although
Uh,
in reality, you actually wouldn't push someone towards tennis because it's actually very, you have to like, tennis is way worse than golf in terms of financially. I don't know if you knew that, but like
no.
if you're the 100th best golfer in the world, like you are easily you're making like a couple $100,000 a year. Like
Okay.
you're like well into profitability.
Yeah.
If you're the 100th best tennis player, you are like you're like scraping by. You're
Yeah.
you're not even really making a living after expenses, I think. But
The problem is like I mean, again, like I don't know at the professional level, but I mean there are millions and millions of players. So to be in the top 100 of any sport, like
yeah.
I mean, like as a for instance, I mean, for a number of years here, and my kids were into squash,
Hmm.
and squash is so much more niche. You know what I mean? There aren't millions of people playing squash. There's probably, I mean, maybe in the whole world, but like in the whole world, there's tens of millions playing tennis and golf. You know what I mean?
Yeah, yeah, yeah,
So
yeah.
to be, and it's still really hard to be in the top 100 in squash or the top 1,000 even. So it's like in something like tennis or golf to be Tiger Woods or Roger Federer is ridiculous. Like
Yeah, I mean, it's insane. Like
yeah.
I was one of the top. I was like the best I got in tennis. I mean, I was number one in Division 3 for a while in tennis.
Okay.
And the thought of like trying to go pro never really crossed my mind. I was probably good enough that like there was one guy who was in Division 3 who I had a winning record against, but who he beat me the last time we played in the quarterfinals of NCAAs, and he went on to win NCAAs. But he beat me in 3 sets. It was a close match. He went on to try to play pro. I mean, he did play pro for like 5 years, and man, that was, I think he got up to like 800 in the world or 1,000, but
Yeah.
like that's
Yeah.
that's just it's a freaking grind. I mean, yeah, it's so
If
hard.
you do that, it's got to be like a dream, like to chase your dream because like
Yeah,
it's just
exactly.
the odds are so daunting that,
Yeah,
relative to that, like, when people talk about like, oh, getting into a top school, like you went to MIT, or, like, I don't know, starting a investment business or something, the odds are nothing like
right.
trying to be number, top 10 or top 100 in any
I
sport.
mean,
Like,
yeah,
forget it.
it's
Yeah.
and there was probably like, when you're like 1,000 in the world, there's like there's you're like 2 or 3 levels away from like guys that you can almost never beat are still not making it, which
No,
is
that's right. That's right.
that's the tough thing. It's like, you're 1,000 in the world and you play a guy who's 75 in the world, and you're getting smoked.
Yeah, like even in squash, I mean, there's so many levels. Like, I mean, you could be, you know, you could be forget the rankings. I was nowhere near, but I mean, you're just slightly worse and you get smoked.
Yeah,
You
yeah,
know,
yeah, yeah,
and there's like dozens of levels above that.
yeah,
So yeah,
exactly.
it's very. In fact, that was one of my, like sort of like calculuses, right? I don't know if you thought this, but in terms of going into like business and investing, is like there's just so much more opportunity. It's it's
Yeah,
definitely not a zero sum game,
I
there's
mean,
there's
yeah,
a positive sum.
I mean, we can talk about poker in a second, but like
Yeah.
in college I got into and I guess maybe we should just fully go into that, but like
Yeah, let's
I
talk about it, man.
I yeah, I guess but like one of the reasons why I made the switch from poker to the investment world is cuz I probably was I probably was legitimately top. I mean, on like on as far as like online players in the realm of like 2006 to 2006, 2007, 2008, like that era, I was probably like top 200. And you can make six figures doing that. Like it's
Yeah.
actually more, it's
Yeah.
actually probably more lucrative than tennis.
Was
Um,
that the same era when like Tom Dwan and Isildur were there, or that was later?
yeah, yeah, those guys, yeah, that was, I mean, those guys had a longer, for sure had a longer career than me, but that was, yeah, that was in their like heyday. Yeah, yeah, yeah. Those are
Got
like
it.
those
Okay.
were like the top guys. I was like
Yeah.
one of the top players at like, you know, maybe like two rungs down from that, like $1,000 buy-in, $2,000 buy-in, sometimes
Yeah.
$5,000 buy-in. Like that.
But
That's what.
Dwan got smoked after that, you know?
Yeah, he it's interesting. Like poker's had a lot of evolution over the years, and it rarely do you see people who I mean, actually, since like the internet age, you saw, yeah, like many different generations of like people who were like would be considered the top. But yeah, I guess we can, if we want to go back, we can take it back to so
So go back to MIT first
yeah,
and how that led you into poker. But I
yeah,
mean, people, I think MIT is also one of these schools that I'm sure people wonder, like, what was it like to go there
yeah.
from, Florida?
It's
What
it's
did you expect?
it's
What was
very
it
interesting.
like?
I mean, I guess the different, like in high school, I went to a pretty good school, not like amazing. I mean, public school. I guess now it's amazing. Now it's like a top. It's like one of the top schools in the state apparently. But back when I was there, it was just like a normal good school. Um, and getting good grades was like not that tough. So I was never like really super challenged, I think, in high school. And then you get to MIT, and it's like every single person that you talk to, because it has like a 1,500 plus SAT. That's like table stakes just to like
Hmm.
being considered for application. And usually I have like some other thing that they're good at, or there's like some other interesting thing about them, um, or they came from like a top prep school or something. And then of course then you also have like the people who are just like complete geniuses, like international math olympiad, like whatever, like super smart people. um
Right.
the interesting thing, I mean, academically at MIT, people maybe expect that it would be like super competitive, but actually it was almost kind of the opposite, because you get there and you went from like being able to get straight A's with coasting through high school to a situation where you literally cannot do the problem set. Like
Right.
there's 5 questions and you can figure out one of them.
Right.
And so they would actually the professors would, and I'm sure now it's got to be somewhat different in the age of ChatGPT, where like these programs can just do all the problem sets, so they have to figure out.
Yes.
I actually
Yeah.
don't know what they're doing.
I don't either.
I'm sure the professors are doing something smart. Maybe just the problem sets aren't graded, and it's all like, if I was the professors, I would just move everything to 100% of your grade would just be based on in-person, like pencil and paper test, and then everything else is
Exam.
just
Yeah.
optional. Um,
Yeah.
because that's anything else I think is ridiculous at this point. But yeah, back in the day, I mean, you'd have the problem set would have 5 questions, and there's each one has multiple parts, and each part, like it's not like just like applying something that you learned. It's like it's like each question is like different in a way that like challenges your like core understanding. It'll be like not something that you necessarily or even learned in class, but like challenges like your kind of core understanding of the topic in like an interesting way. And then yeah, you kind of have to collaborate. So I mean, there'd just be a bunch of like people who were straight A students in high school, like sitting around at 1 a.m. banging their heads against some problem set, and trying to figure out. And of course, you had the like still had the super smart people who could just do it all. Like I had a friend who would he probably would have triple majored, but the MIT doesn't allow it or they didn't allow it anymore when I was there, because they didn't want people
Uh,
to overwork themselves.
right.
Um, he double majored and like just got straight A's and everything, and like I, like there were some people he had like framed a couple like letters from professors
Hmm.
that said something along the lines of like, hey, you were by far the best kid in the class, if you ever need a
Yeah.
recommendation, like let me know. and,
Nice.
and when I saw that, and I was like, I like this is a thing? Like who like
Yeah,
I'd never heard of that before. Um,
right.
I had 2 friends that got things like that.
It is if you're like a super genius, I
Yeah,
guess. Yeah.
that guy,
Yeah, it was any idea what happened? What'd he do? What ended up happening
yeah,
to
it's
him?
actually very interesting. He I won't out exactly what, where he went and stuff, but I'll kind of give you
Yeah,
the rough information. He
yeah.
went home and he had his dad ran uh, a business like a car dealership business.
Okay.
He took the dealership from when he graduated in like the 07 08 era. He took it from there from like 3 car dealerships to like 50 or 60 last time I checked.
Wow. Amazing. So
So like
super successful.
super successful. Yeah. I mean, you have like one of
Yeah.
the smartest people I met in college, like
Yeah.
applying his brain to like an old school business, like and like marketing, and like I mean, just I yeah, very very.
How much correlation, I think it's very high, but how much correlation do you think there is between success in investing or in business and, essentially raw,
Yeah,
like, firepower?
I think like 80%, like 70 or 80% correlation. There's something else
Quite
there. Like
quite a bit,
yeah,
right?
quite a bit.
Not everything, but yeah.
I think investing is kind of similar to poker where there's also a different thing. Because like I think it probably correlates more to well, I think in business in general there's the raw intelligence, but then there's also aspects of like emotional intelligence and like social, because like to run a business you have to be able to deal with people, you have to, and this guy also was like super outgoing, like you wouldn't know, like interestingly enough, even though he got straight A's and was incredibly smart, you wouldn't even,
Yeah.
also super diligent and like responsible even at like a young age, like way more than I was in college. Like he would be partying, he would be like going out or like watching a movie or whatever the night before the test, because he would go to every lecture and just like write super diligent notes and like have done everything like completely by himself the whole semester.
Mm.
And so he just knew, he was like one of those guys that like just like not only was he smart but he just, and so that type of thing is also super important obviously for
Yeah.
business or anything in life.
Right.
But then with investing, I feel like there's this other, it's similar to poker where um because good decisions in business are not as volatile in relation to the price of the action. So like for stocks, like in business, like a good business idea or a good like expansion project or like a good hire, like whether or not whether you hire someone for a job,
Mhm.
they don't like come to you and demand, a salary of 50,000 one day and $1 million the next day. You know what I mean? Because there's just like a going rate for for that job, and it's just like, whether you hire them or not. But in investing, the stock is at $10 one day and it's at 100 the next, and it's a completely, and it has nothing to, and it's more about your, it is about how smart you are, but it's also about like how emotionally you handle that kind of like change in the price of the thing.
Mhm.
I think is less about
But, like, as a for instance, and at least I have a bias here, but I don't know that, like, for example, most of the best poker players in the world are, like, super brilliant,
no, I don't.
in any
Yeah, exactly.
intellectual sense, you know?
Yeah, there's, and because poker is the same way, because the bet sizes change, right? So being smart enough and kind of like quantitatively oriented enough to like analyze that, like and kind of like humble enough in a way, not that poker players are necessarily humble, but like intellectually humble or like humble like within the game, um enough to, understand like when the situation has changed and when you need to just like let things go, and being, and like and not getting emotional about the decisions that you're making,
Mhm.
is like one of the most important things, and that's like seemingly uncorrelated to intelligence. Like the number of smart people I know that like can't that like would like refuse to, and I mean obviously it's this kind of type of discipline is probably correlated to intelligence, but there's a lot of smart people that can't sit at a poker table and like just fold for an hour straight because that's the correct thing to do. Like they're just not going to be, kind of disciplined enough to do that.
Well, one thing in poker that I play poker occasionally, on and off, really, and not at any incredibly high level. But one thing you definitely see all the time is somebody loses a hand, particularly in like a bad beat, like a hand they should have won, and then they go on what's called tilt. So
Mhm.
the very next hand, they'll go all in with basically any garbage.
Yeah.
Yeah. So that's like some like as an example of an
Yeah, exactly.
emotional
Like that's
decision, right?
yeah, and it's probably a little bit correlated to intelligence, but um yeah, it's more about it's more about just like pure self-control.
So
Um
going back to MIT though, I think MIT was very significant, right? Because you met your partner and
yeah, I
your
mean,
spouse, no?
yeah, met my spouse there, met my yeah,
Business
met I
partner.
guess I met both of my partners there, you might say. Yeah, met my wife there, and met my business partner there. And and just met a ton of other incredible people. Like it's that I'm still friends with to this day. Yeah,
You are, okay.
yeah, it's wild how many you know successful, smart people you meet at these places. Like what one of my good uh college friends is now the CEO of Crusoe Energy, which is like a their stock is
Mm,
valued at like $10 billion or 15. I don't know what it some outrageous amount. I think there's rumors that they're gonna IPO sometime in the next year or two.
mm. Oh,
Um,
it's a private company. Okay.
yeah, it's private. It's private company that's valued. I mean, this is public information. I think it's over 10 billion or something.
Yeah,
Um,
wow.
and yeah, like when I was like that's thinking about joining a fraternity, the guy that rushed me, that guy that like was trying to convince me to join one of the fraternities, was Drew Houston, the founder of Dropbox.
Okay.
But
I don't
yeah,
know him, but yeah.
yeah. So that's like there's just like that type of people all over MIT, and then like
Yeah.
the professors. One thing I do regret, I think I didn't like fully intellectually mature until I was like until I was like 30 probably, in terms of like
Mhm.
appreciating. I definitely didn't appreciate MIT while I was there. Like you can like there's this thing called the undergraduate research opportunities,
Mhm.
which is called Europe. And I mean you can do research with like Nobel Prize winning professors and get paid for it. I mean, they have to agree,
Yeah.
obviously. They have to like want
Yeah.
they have to want you. But it's like but it's very common. And
Yeah.
yeah, just like with things like that, I definitely didn't fully appreciate that it was, this was going to be like 4 or 5 years of my life, and then like that type of opportunity is like
Makes sense. Yeah.
just goes away. I mean, it's when when you're 18, 19, it's hard to really it's hard to really wrap
Right.
your mind around that.
But it also you discovered poker there, so you went as became a professional poker player right after MIT?
Yeah, so I would actually say I probably became a professional poker player while I was at MIT.
Okay.
In terms of the amount of time I was doing it and stuff, like you know,
And just to calibrate, like, time frame, like, what year did you graduate MIT?
so I graduated in 2007.
2007,
So it was
okay,
like,
got it.
yeah, like 2004 to 2007, I was playing a ton of poker. Yeah.
And what
Um,
led you to that? You were just making money while you were
yeah,
playing
I
it
mean, yeah,
online?
so
Yeah.
we like me and some other guys in my fraternity would just play, and other people around MIT would just play like house games. Like
Like, each other,
yeah,
like
we
house
just play
games,
with each
yeah.
other, and then we would. I mean, some of those games are pretty intense.
Oh, yeah?
But
But that's not necessarily a way to get really good really quickly, though, right? So you must have how did you get better at it quickly?
so the way I got better was one. I mean, was just playing. Playing in person. That can do a little bit for you. Then I started. A buddy of mine had uh his name Jesse Chandler was his name. The odds of him watching this podcast are, I don't know, maybe they're not zero. He's actually, I think he's in the finance world still. Um but he would play on a website called Pacific Poker, which was even predate Party Poker, I think. Uh, and I would just watch him play like literally $1, $2 limit hold'em on like in between classes, and that started getting me really interested. Then a buddy of mine got a job in Cyprus of all places, which he thought was going to be like a computer science or electrical engineering job, but it ended up with him getting up on telephone poles and like having to like repair like electrical like telephone wiring or something. So anyway, but while he was gone for the summer, he let me use his like the like $300 he had on Party Poker, and he basically was like, if you lose it, you just have to pay me back, and if you win money, I'll just like send you whatever you win, like whatever. Um, which was nice. He obviously trusted me to pay him back, which was good if I lost. And I think I won a couple
Mm.
$100. And then that was like 2000, that was probably 2003 or something. And then from there, just kind of ran that up on Party Poker and other websites, but into the thousands, into the tens of thousands. What actually caused me to improve a lot in poker was, well, I started reading books. And there's this book called The Theory of Poker by David Sklansky, which is like a seminal book in the poker world. Just kind of takes you into the numbers, behind, like, if the pot is this big and someone bets, like, how often should I call, how often should I bluff, like in terms of the numbers, like, and you kind of take it from there, and he kind of develops the theory of how to play poker, like what types of hands you.
He was a pretty good poker player himself, right?
Yeah, he was a pretty good poker player.
I've
Yeah,
heard
yeah,
of him. Yeah. Yeah.
yeah.
Yeah.
But then actually that book is good. And there was a couple other ones by his publishing company. But then what really took it to the next level, the next like few levels, was their like website of the publishing company. So they had a website which had a forum, and people would post hands that they played, and then you would get like really good players in there talking about like not just like what they would have done, but like how they would think about the hand. So
I see.
it would say, I raised with ace king and the flop came this, and I bet, and this guy raised, and here was my description of him, and like here's what blah blah blah.
Yeah.
And so that's, I think, where you really get into like just hand after hand after hand of like reading and talking about poker. I probably had a I have since lost my, I don't remember what my screen name was or whatever, but like, or and like
Mm.
and like I have since lost my password, but I think I had a couple thousand posts on there, just talking about different hands, and besides my own posts, besides when I would post a hand, I would like comment on other people's hands, and you just kind of talk through it. And yeah, it's weird because in poker, there's a lot of bullshit. Like there's a lot of books that you can read, at least back then, that would have like kind of like non-quantitative mumbo jumbo, like rules of thumb, or like kind of like
Okay.
superstitious type things. Or it would be like, oh, there's 6 different types of players: the hedgehog, the turtle, and
Oh,
you
right.
know
Yeah. Right.
which
Yeah. Yeah.
border on the like totally superstitious to like
Yeah.
they're like only moderately useful.
Yeah. Yeah.
And then you had this one publishing company where like all the books were good. All the books were like grounded in some type of rational thought slash like numbers, and then you combine that with the websites, and then you're,
You remember the name of the company?
yeah, 2+2 publishing. Yeah, 2+2.
Two plus
I don't know
two.
why
Got
I don't
it.
know why
Got it.
they called it that, but yeah, I think the forums are
Yeah.
still.
Interesting.
I think the forums are still.
Yeah.
And actually, the way I kind of describe like how I got into value investing is like related to that.
Yeah.
Once I started making some money from poker, I ended up, after college, I decided like not to. Well, first I thought maybe I would go to law school. I think I still would have enjoyed being a lawyer. I mean, you would know better than me if I would have enjoyed that, but I decided instead of going to law school, I was just gonna keep doing the thing that was already making me some money. Um,
Uh.
and so, yeah, I played poker basically. basically
Mm.
full time in like 2007, 2008, 2009, beginning of 2009 era. And
Mhm.
then, but when like in any business, when you once you are profitable and you're like setting aside some money, you have to figure out like what do I do with that money, right? So if you want to seek out a financial advisor, you could call someone like yourself or me. We're happy to help, right? Or you can try to learn on your own, which is what I did, um and or both. And that's when I actually contacted my well, then he was just like one of my friends from college, but his
Mm.
dad had run a fund for like a decade or two. And so he was like always grew up around investing in stocks and stuff. So he was kind of known in our circles as like the guy who knew about investing. And so I think I kind of had him. I was like, "Hey, like I want to learn more about investing. Like, where should I kind of turn?" And I think he at that point put me onto Buffett and the whole, value investing canon. And almost immediately it kind of spoke to me because it felt like a similar, group of ideas that were, a bunch like a rational framework within like a larger soup of like nonsense, if that makes sense. But like, and then also in investing, there's all kinds of books, from like stuff about technical analysis to, there's all types of nonsense out there. But then there's value investing, which is kind of like okay, let's break it down. Does it actually mean to invest in a company? Okay, it's about like this future stream of dividends and free cash flow that you're going to get. Okay, well, how should we think about that? Like, where do opportunities lie? Like, blah blah blah. So yeah, value investing kind of spoke to me immediately. And so I was kind of doing that on the side with my own money. And then when my buddy graduated, he was basically like, you know, he was deciding. A bunch of his friends went to New York to do various things, mostly finance, and he was deciding whether to either go to New York with all his friends, other young people with like an analyst class, etc., or go work one on one with his dad in Avon, Connecticut.
Mhm.
So he basically told his dad, "Listen, Dad, if you want me to come work for you, like you have to hire at least one other young person so I can, have someone within like 2 decades of my age around to
Mhm.
hang out with." And so that was me.
Oh,
Um,
wow.
yeah, so we started working for his dad in 2009, and then yeah, I was
So
basically
that was 2 years after you graduated?
yeah, 2 years after I graduated. Yeah, so that was
Okay.
2009, and then we worked for him straight through to 20 like late 2015, which is when we started, thinking about starting the arts, just basically
So
breaking.
what did you so what talk about that work experience, what you learned, and then let's jump forward to starting your own
Yeah,
and
I
why
mean,
and so forth.
I learned, I guess I learned what it means to actually, not just invest your own money, but like, have like, because I was back when I was just, 2007, 2008, I was just, I was mostly playing poker and I was kind of investing on the side. I was, looking at an idea here or there, but nothing super formal. I wasn't building Excel models or anything like that. And then, at Ballantyne Capital, where we worked, I kind of learned, you know, how to build out, I guess, and how to like build out my own investment process. Like I had to figure out like, well, what type of stocks am I really interested in? Like, how do I want to go about, quantifying what I'm looking at? I kind of figured out my process for, building out Excel models for just like researching companies, taking notes on companies, and all that stuff. And as well as learning about, I mean, I wasn't making a ton of the decisions, but it was, as far as like what to invest in, but it was nice because my former boss, Steve Ballantyne, he did give us a lot of autonomy as far as like, if I brought him an idea that I thought was good, he would he wasn't resistant at all to like just putting on the position. Like obviously I would have to convince him, but a lot of my ideas did get into the portfolio, which was fun in the beginning to see. Yeah, we also we spent like 6 months probably with 80% of our time spent like spent shorting Chinese reverse mergers, which is a whole interesting listen. Yeah, we it was like back in the like the heydays of, or I guess maybe not the heydays, but the beginnings of Muddy Waters, if you know
Yeah.
that firm.
Yeah, yeah, Muddy Waters is, yeah,
Yeah, that
uh,
was like
I
that
do
was like
know them,
during
yeah.
their like starting period, like 2010, 11, 12, 13 kind of.
I've
And
spoke to the founder there.
okay, yeah, Carson Block. Yeah,
Carson, yeah.
yeah, I never talked to him directly, but I definitely followed his research very intently and would try to replicate certain things that he would do. Like um, we had a person in, we had a person in China who would would pull local filings for us, because there were all these Chinese companies that were publicly traded in the U.S., but their business was in China, and so you could check up on. I mean, you had to be a little bit careful, but you could check up on how the actual how the subsidiaries in China that were supposedly doing hundreds of millions or billions of dollars in revenue, what they were reporting to the local authorities in China.
Mhm.
And a lot of times it was like almost zero.
Really? Wow.
Yeah. And so so through that process I learned all about, like, the kind of the business of shorting, which is first of all very difficult. Even if you know things are frauds, it's very difficult because
Yeah.
you have to manage the borrow rates. I mean, back then especially, like, stuff would have very high borrow rates if it was like an obvious
Mhm.
fraud. Interestingly enough, like, I think nowadays, like, it's actually shorting because people have done so poorly at shorting over the last like 10 years. Like, it's just been a terrible idea. You've just been like running in front of a freight train, or standing in front of I don't know.
Hmm.
Um, because of that, the borrow rates are just much more reasonable. Like, you can borrow, like, even though, like, there's all these quantum stocks, which I personally think are going to zero, but
Uh-huh.
you you don't have to pay a borrow rate anymore.
Like quantum computing, you mean?
Yeah, quantum computing stocks.
Yeah.
Yeah, yeah.
Yeah, yeah, yeah.
Like, back in the day, you had to pay borrow rates, which was always tough.
Mhm.
You'd have 5 stocks that you'd be short, and 4 of them would turn out to be frauds. The one that wasn't
Yeah.
fraud like would for sure
Hmm.
double on you, so then that hurt you. And then the other ones, you're
Hmm.
paying borrow rates, that were maybe 20 or 30%, so that makes it tough. Then a
Yeah,
couple
it's tough.
one time, I mean, this was the worst. One time a stock got halted. I mean, basically because it was a fraud. Um, Although I don't think that was like explicitly said anywhere, but like it was a fraud. Um, and the broker kept trying to charge the borrow rate the whole time it was halted on the former market price. So, like, you have a stock that's a 500 million market cap or something, and the stock, there's 100 million shares and it trades at 5, and then you shorted it, and it's definitely like, if it opened, it would trade at like pennies because it was like revealed to be a fraud.
This podcast is sponsored by the Capital Alliance Mastermind, a private community of asset managers and investors building something real together. Members gather in person a few times a year to tackle the hardest problems in investment management: raising capital, scaling operations, and building relationships that move the needle. What makes it different is the room itself. These are people who share deal flow, make introductions, and hold each other accountable, because everyone is committed to giving, not just taking. We're currently building our next cohort. If you manage a fund, join the waitlist in the first link in description.
You think there's a certain type of investor who's attracted to shorting?
Who's what's a shorting? Attracted shorting, or like who's good at shorting?
Yeah, wants to short given the long and challenging aspects of
Yeah,
it.
I mean, you do have to be a little bit of a sicko. I mean, I am just a very kind of cynical, or like I don't believe things very easily. Like, my wife will get annoyed if, like, someone will someone will tell me something, and I'll be like, I don't actually like, you know, someone that we met said I don't want to get into details, but like, yeah, like, someone that we met told us something, and I was like, I don't believe that for like X, Y, and Z reasons.
Mhm.
So
Mhm.
I'm just a little bit cynical like that. And so, and also, like, there's something a little bit addictive about the research on the short side. Like, if you can, especially back in the day, like, nowadays I almost feel like there's there's like so many potential targets for shorts that like
Hmm.
that don't have that like maybe have questionable business models. Um, but it's like just where even though like you think maybe it's obvious, it's just more about managing the fact that like it could become a meme stock and like triple in your face. And that's like not that exciting, but like what used to be exciting back in the day was, the due diligence process of like figuring out like, oh, I hired a guy in Beijing to pull the local or Shenzhen or something to pull the local SAIC filings that show the company as a fraud and blah 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 blah. Like that was like super that's just super fun. Like that's like
Hmm.
really like, turning over the rocks.
Well, who is it? Is it AMC that's buying eBay now or making an offer or something? Or
Oh, GameStop. Yeah, yeah, yeah.
GameStop,
Yeah,
right?
it's
That
like you
was
can just
the two meme stocks, right?
yeah, I mean
Yeah,
you can just look at some of those valuations and just be like this is so ridiculous, but
yeah.
but of course profiting from that is a whole different story.
And so yeah, so how did that evolve to, okay, we're going to start our own thing and talk about what you started and why you did it when you did it?
Yeah, so in 2015 or so, our old boss was basically, he basically decided he wanted to. I have described it in the past as like he decided he wanted to kick us out of the nest and see if we could fly, and I think that he felt like he had mentored us enough, and for both his son's sake and my own, like it would just be better if we if he seeded us, and we kind of went on our own and could grow to do whatever we just kind of see what we could do on our own.
Hmm.
And of course, you don't very often get in the investment world, like having someone seed you or give you like your first capital is just such an incredible opportunity. So I'll forever be thankful to him for that. And yeah, Steve Ballantyne gave us 20 million to start back in 20 early 2016.
Nice.
And yeah, and so we started the firm Bireme Capital. In the beginning, we had a few different investment strategies we were doing. One was like my stock picking strategy, and then we also had some more quantitative focused strategies that my business partner was running back in the day. And then over time, we kind of circled the wagons around like my long short stock picking strategy, which is what we do now.
Hmm.
And yeah, so we've taken that 20 million and now we have 155 or so.
Very good.
Yeah, and it's just been kind of a slow grind of, returns plus the occasional new client who either like in the beginning it was friends and family. I mean, one nice thing about MIT is like in 2016 I was 32, and by
Hmm.
then like a bunch of our peers had already made enough money that they could give some to us.
Oh, that's good.
Which was kind of rare to have a bunch of kind of like 30-year-olds clients
Yeah.
in the RIA space, but like we were lucky that was the case, and obviously we were also
Hmm.
lucky that they trusted us with that money because that's
Yeah.
um another issue. So in the
So
beginning it
and
was
so talk about, yeah, the process of, and what's your investment, what you've learned about investing in that process.
yeah, what I've learned about investing or what I've learned about like the business of investing.
No, how you invest with Bireme and
Okay.
like
Yeah, I
what
mean,
you found to works for you.
so the way I pick stocks, I have this theory that basically undervalued. I mean, in a sense, it's kind of a tautology, but I have this theory that undervalued stocks are caused by cognitive biases, and while there's errors being made all the time in the stock market, mostly they cancel out, and so mostly prices are
Mm.
pretty efficient. But occasionally, you have a situation where some type of cognitive bias causes a majority of market participants that even know about whatever stock it is to make an error in terms of the price that they're willing to pay for it. So it could be a classic example is availability bias, which is where you give undue weight to things that are more newsworthy and more available to your
Mhm,
mind.
mhm.
And so like yeah, more newsworthy, more prominent, and so maybe you don't, but maybe people don't notice like what's really underneath the hood. So like an example of that potentially is like, we invested in Facebook back in the day before it was Meta, during the time when they had the whole Cambridge Analytica scandal, which was when the Trump campaign hired this firm in the UK to kind of like mine meta data, Facebook data to create profiles on voters. It didn't even really work for them, but like people just like started freaking out and talking about canceling Facebook, canceling the Facebook accounts, whatever. And after a lot of research, we just realized that it wasn't going to impact the business in the long term, and it was just like the newsworthy thing that. But the business had underperformed the Nasdaq, the S&P and Nasdaq by like 30% or something like that over that year. That was back in like 2018.
That's an interesting example. So what are good, like what are good sources of ideas for you, given you have that theory that,
There's, I think,
so how do
I would
you
say
generate the
every like little bias has like a different kind of like place you should probably look. I mean,
Mhm,
there's what I would call familiarity bias, which is just like, I mean, it's kind of in the name. It's just like being biased towards things that you are familiar with, that you know well. Like a version of that is the home country bias in investing, where people just want to invest in the things that
mhm,
they, like their own country. When you combine that with what I would call extrapolation bias, which is the bias towards like just assuming that like current trends continue forever. You combine those two things, and I think they created an opportunity in the last couple years to really look outside the U.S. for investments, because the U.S. markets have been doing so well for so long,
mhm,
and everyone just agreed up. Maybe in the last year, it's kind of, this vibe has kind of shifted a little bit as far as like for stock returns. Um,
mhm,
Although maybe not. That was an opportunity I thought to look outside the U.S. Whether it's, we have investments in Africa, we have investments in Latin America, we have a huge position in Japan, and that's kind of those biases, like where they point you. Then there's one that I call, there's one
mm,
that's called representativeness bias, or I prefer lazy grouping bias, which is the bias towards grouping things, or I guess in this case stocks or businesses,
mm,
um
mm,
in a kind of lazy way that doesn't like drill down to the details. So like canonical example of that is Apple being valued like a hardware company in like the mid
mhm,
2010s. I mean, 2012, 2013, 2014, 2015, Apple traded at like 5 to 7 times earnings when you backed out the cash. And I think the reason why mostly was, people were like, well,
see.
they sell literally the argument was like no deeper than they sell phones and computers, and like look what happened to the IBM laptop business and the Nokia phone business. Like, aren't these terrible businesses? Because literally the package that you buy it in is a piece of hardware. And there is, and it is true that like the problem, the tricky thing is, there's a lot of times there's some truth to it, right? Like, so you have to figure out like, where does the truth of the situation turn into a bias in terms of how it's
Mhm,
impacting the valuation. Like, if Apple was, if the S&P was at 20 times and Apple was at 18 times, maybe that wouldn't be true. Maybe this wouldn't really be a bias. But the thing is, the market was at 18 times and Apple was at 6 times. So, you start digging deeper and you realize, well, wait, when people buy an iPhone, they're paying like 20 or 30% more than the equivalent hardware in an Android phone. Like,
mhm,
and that's why Apple's gross margins are so substantial, and
mhm,
they're not at all in line with what Nokia's phone margins were. They're like triple.
mhm, mhm,
And eventually, I mean, shouldn't take people long to realize, like, if you really think about it, they're buying when the people buy an Apple product, they're buying the software mostly. Like, they're buying iOS, they're buying, the ability to have a blue bubble when they text people. They're buying the ability to have their mom be able to FaceTime them when they need to,
mhm,
as opposed to having to download WhatsApp or something. Um,
mhm,
and so, from a valuation standpoint, Apple was just grouped in with these other businesses that, the financial statements and the growth and the returns on capital really were very different then. And so
mhm,
so for those companies, I think you have to look for, the place you look is like You just keep turning over rocks. You just take everything that's like cheaper than the market, and just keep turning over rocks until you find something that's unique. Then you have to analyze, like, okay, it's unique, but is it in a way that makes the valuation, is it in a way that people are misunderstanding? And is it in
Hmm.
a way that causes the valuation to just be like very off?
Uh-huh.
And so, like, other ones where I've found that be the case is businesses with multiple, like, very different segments. So, like, for example, our biggest winner of the last few years was this company Airtel Africa, and
Hmm.
it's a telecom business, has one sort of profile, but then it also has this mobile money, this mobile money business where their money transfer product is the backbone of the economy of like 14 different African countries, and has been growing 30% for a decade. Like, the business has gone from 100
Hmm.
million US of EBITDA to it's going to do like 750 or 800 million US of EBITDA over the past like 6 or 7 years with no down years. Like,
Just
every
the
year,
mobile money side.
20 to 30% growth. Yeah, it's unbelievable.
Just the money side, yeah.
Just the money side, they've gone from like,
Mm.
5 to 10 billion of annual transfer value to they're now in the latest quarter they did like on an annualized rate, they're doing 215 billion US dollars of transfer value.
Mhm. And what's the market cap of that company now?
Is well yesterday or today, because it was up like 10% today or 12%, something crazy. But
Well,
at
which
like
either
around
one, yeah,
it's like
today.
around like 20 billion. Yeah.
Still pretty small
Yeah,
relative
so
to big
it's
companies,
yeah, I
yeah.
mean, it's still like, it's maybe 20 times EBITDA on like a couple years out of the mobile money business, so it's not crazy.
Got it.
And then
Yeah, yeah.
you have the whole telecom business, which is another growing business. So
It's actually growing, yeah.
yeah, so people
Airtel was, an Indian group, I think.
it is. The reason why it was up so much today, they actually made a very interesting announcement,
Mhm.
where well, so okay, let's just take a step back. So there's Airtel Africa,
Yeah,
and then there's Bharti Airtel,
right.
the parent company.
The Indian,
And
right.
over the years, when they first bought it, or when it first either re-IPO'd after they bought it from or just when they first bought it, they had like
Mhm.
55 or 60% ownership. But then over the
Oh,
years, they've been doing three things. They've been buying back stock. The
mhm,
parent company has been buying more shares, little by
okay.
little. And then also the family, so the Mittal family that is
Uh-huh.
that controls Bharti Airtel,
Right.
they actually through their Mauritius family entity
I see.
have bought up about 16% of the shares. So all
Oh,
in,
okay.
the company has gone from like high 50s to like 70, like 8% controlled by the Mittal family
Got
in
it.
various forms.
Got it.
And
Got it.
what they announced today was that Bharti Airtel, the Indian company, is having a meeting in 2 days, and one of the things they're going to consider is further consolidation or restructuring of some of their subsidiaries, including specifically Airtel Africa. So people are speculating that they're basically going to try to buy out the whole thing, or there's going to
I
be
see.
some type of offer.
Got it.
Yeah, so it's a
Interesting.
little bit complicated, but yeah, that's another one that kind of fits that mold of.
So I know your fund has done really well. And I guess it sounds like you have a very large percentage out. What percentage of the fund is outside the United States?
Well, the shorts are basically all in the US. So we're like
Right.
we're
So,
heavily net short the US, I would say. I mean, we have
well, what
probably
percentage of the longs are outside
yeah,
the US? And then,
probably, 10 to 20% of no, maybe like yeah, 20% of the longs are in the US, and then
okay,
like 90 or 100% of the shorts. So, the shorts are like 40% of NAV, so you end up being like net short like 20% US.
okay. And I know Japan is another big area of interest, but I know you probably noticed the Buffett and Berkshire owns a lot of these Japanese trading companies. Any thoughts on those?
The trading companies are interesting. I mean, I actually, funnily enough, I bought in my daughter's Coverdell account. This is this one where you can like just put out like $2,000 a year in, and it goes towards education expenses, but it compounds
Hmm.
tax free.
Hmm.
So I wasn't like, only $2,000. So I wasn't like taking it that seriously, but I bought Itochu, which is one of those trading companies. Like, this is like
Hmm.
10 years ago or something.
Mm-hmm.
and that's done super well. I was just like, you know what,
Mm.
these Japanese stocks are cheap. This is before Buffett did it.
Mm-hmm.
And so when he came through with a trading company, I was like, that validated my
Mm-hmm.
investment, and it's done super well. I mean, I never got enough of an understanding of really how those, particularly those trading companies worked,
Mm-hmm.
and fully understood them well enough to back it as like a 10% position in like my in the biz for Bireme Capital.
Mm-hmm.
Which involves like, putting to work like, 10 or $15 million. I never got completely comfortable with those businesses for the firm, but um yeah, it's just indicative of how many cheap things there were with like, like if you look at if you had just like eyeballed their financial statements and asked like where should this thing be trading, you would not have said 6 or 7 times earnings, which is what they were trading at back when Buffett.
And what about now? I know the Japanese market has improved, and also
It's yeah,
governance is
it's
improving.
improved. Honestly, up until this year, we had not done that well in Japan. Like
Mm-hmm.
most of our returns were not. I mean, not only like one or two of our. We probably invested in like 8 to 10 different stocks over the last couple years, and only like one or two of them really re-rated. And so I really felt like I really still feel like there's a lot of opportunities there. And just in the past like few months, we've had a couple really re-rate, which has been interesting. So, but still, I mean, when they start out so cheap and they have a bunch of net cash and stuff, like even if they're up 50, 60, 70%, like sometimes it's still like we haven't even sold the ones that have re-rated yet.
Yeah.
Um,
And I think it's one of the currencies that potentially is undervalued too. So there might be a
Well, yeah,
double.
I mean,
Yeah.
I was like not stopped dead, but I was like very intrigued when I saw that Paul Tudor Jones was on the Invest Like the
Yeah.
Best podcast.
Exactly.
And I saw that he
Right.
said something about the yen, and I was like, "Oh, I'm gonna look into
Yeah.
this now." Because
Yeah.
because people ask me all the time, "Do you hedge the yen exposure?" And I say
Yeah.
no.
Yeah. Yeah.
And I say no
Yeah.
because like what Buffett did was interesting. Was he was hedged in the yen, and because he just borrowed, he borrowed at like 1%, invested in the
Mm-hmm.
stocks, um, and then he's essentially hedged in that way.
Yeah.
And he is paying a small borrow rate, but like the dividends are more than
Yeah.
covering that, so it's like it's all gravy. I decided
Yeah.
to not do that because I looked at, you go to Tokyo and you get a really nice hotel for the equivalent of like $150 US in like downtown Tokyo, and you're like, in New York this would be like $500.
Yeah. Clearly.
And maybe that's a little bit of an exaggeration, but it's like, I mean, Tokyo used to be one of the most expensive places in the world,
It was
and it was the
absolutely.
most
Maybe
expensive
it
place,
was the
right?
most expensive. I think it
Yeah,
was the most expensive.
and
Late 80s to early 90s. Yeah.
right, and so since then, I mean, you've seen like on a purchasing power parity basis, the yen
Yeah.
just completely move in a way that I don't think is really reflects the value of the currency and the diversity of the economy and things. And so yeah, so Paul Tudor Jones was like on that podcast was like he was like, yeah, the way I view investing is kind of like a bunch of periods of like multiple years of like information gathering and like like trying to hit singles and not lose money and like 3% here or there, and maybe with some leverage you can turn into like mid single digits, right? I don't mean to went
Right.
quite into those numbers like that, but that's
Right.
kind of how I interpret it. And then he said, and then occasionally, every few years, you get a situation where a huge opportunity presents itself, because something is really undervalued and there's a catalyst. And that's when he described the new the new prime minister in Japan, and how that could, how she could be basically like a Margaret Thatcher type
Right.
person, and kind of drive the currency back to some.
That was one of the tough things about Japan is the culture is quite sort of insular and slow moving. And so yeah, I think like the normal velocity of things, but now it's been it's literally we're talking like into the fourth decade of like basically like a down, you know,
Right.
economy
And
after
and
many decades of a boom
yeah.
that
Yeah, I
finally
mean,
I think
yeah,
there's
I mean, you did
finally some,
yeah, you
you
didn't,
know,
you didn't break above the all-time highs in the Japanese market until I think a year or 2 ago. Like, the
yeah,
market
it's
was
crazy.
basically
Yeah.
flat, between,
Yeah.
like,
Yeah.
and
From the
I'd
peak
have to
to
check those numbers, but I
to
think it was
break
I
'em.
think I think it was flat between
early 90s, it was when
Yeah,
like the
from like
all-time
not from
high.
like 1990, from the peak in 1990
Yeah,
to like 2022 or something. I think it was the market was basically
yeah.
flat.
And there was a point, I believe, when the land under the Imperial Palace, which is just a part of
Mhm.
Tokyo, was worth more than like all of Manhattan at that same time.
Or like,
And
yeah,
now
it
I
was
see
something
that
ridiculous. Or it was like, yeah, we're
something, right? At least in theory, like it wasn't for sale, but
I
like,
think I
the
actually I thought it was like,
price
yeah, I thought it was maybe even like something crazier than that. But yeah, it was
price per square yard or square meter that
something
something
ridiculous.
transacted at nearby.
What I was wondering about that was like how how do they know what that's worth? Because like I guess they're going by like areas around the very
No, that's what I'm saying. Like the area next to it, I think it's called Ginza. So like if you look at like, oh,
Ginza
something
prices.
traded
Yeah.
in Ginza, and it was like it's not an actual like obviously value, like, but it was just like an imputed value,
Yeah,
let's
yeah, yeah,
say.
yeah, yeah, yeah. They're
Yeah,
just
yeah.
multiplying the
But
price in
still.
Ginza multiplied by the square footage in the Imperial
S-
Palace and whatever. Yeah.
So obviously you're one of the founding members in Capital Alliance, founding member in the sense of one of the early members, and this is the Capital Alliance podcast. Obviously you go to other events. I mean, I met you at Value X, and it's a community that's growing. Just wanted also to touch on sort of like what the experience of this community has been like for you, and
Sure.
what you would say to somebody who's considering it, or is trying to grow
Yeah.
a fund, etc.
The nice thing about Capital Alliance is that it's structured differently than the other conferences that I go to. I mean, the other conferences I go to kind of run the gamut from informal, like at Berkshire Hathaway, like there's no organization to the non Berkshire stuff. It's just like people doing whatever events. It's just kind of a shelling point for people coming together. But capital, and then there's also like the idea based events where everyone's pitching an investment idea, and those are great too. And then, it can also involve like really good networking and meeting people and stuff. But the nice thing about Capital Alliance is like it's like a small kind of handpicked group of people who are specifically coming together to kind of promote the development of the other people. So a lot of us are kind of in a similar range of from people who are just starting up their investment businesses to the kind of like couple hundred million to maybe like a billion in AUM, and looking to kind of drive the next like level of layer of growth. And at these other conferences, you're not necessarily wanting to be super vulnerable, and you're talking to potential clients, or you're just talking to the public at large, or you're meeting someone for the first time, and you're not necessarily wanting to like burden them with your problems of like how do I I'm having this problem with a potential client, or like this is like I'm worried about this in the business, or I have this thing in my personal life that's going on that's like distracting me from work or just causing a problem. But the way Capital Alliance is structured, it's basically like everyone knows that you're coming in, and you're like, because the other people are going to be talking about their potentially slightly embarrassing or maybe off-putting to some people like problems. You're more willing to do that yourself, under the idea of like, well, if we're all saying embarrassing things, then we're not going to be embarrassed with each other, or just honest or whatever, or vulnerable things. And that's powerful, because then you can get, especially if people are trying to like go out of their way to help each other. That can be a powerful thing in the room, where everyone's just kind of you know they're taking that, because you don't want a situation where every day people are bringing their problems to you, but like, because people have a lot of problems and you only have so much time. But like when you spend like a few days for a get together a few times a year, then you can have that sort of like concentrated interaction of like, let's try to like work through these issues that we're having, and we're all going to do it
Mhm,
together, and it's going to be, yeah. So it ends up being pretty valuable, I think.
mhm.
um
Yeah, one interesting thing that I've found is that it's a little bit of a different model because it's like supported by the membership, uh, and so I found, I guess it makes sense because I was similar, but like I do find that folks have a hard time wrapping their heads around the fact that they actually have to like support it with resources, and yet they're all like fund managers and capitalists, and like trying to basically invest in companies that are actually like successful, and generating good returns and things. I just find that to be an interesting dichotomy. But like I said, like I was the same. Like for some reason, I personally didn't want to invest in things until like I had that epiphany of like going to the mastermind that inspired the Capital Alliance, and I invested quite a bit in that, and I got so much benefit out of that that I was like, oh, I was being short-sighted, I was being penny wise and pound foolish. Yeah.
Yeah, it's you know, it's tough because when you're running an investment business, it's hard to necessarily want to add on like an expense of like X $1,000, but then if you can, it for sure pays for itself if you're able to generate any type of extra traction, or you get like one good idea, or I mean, it's in business it's dangerous because you could theoretically keep layering on like many of those like expenses and like and sort of dilute all your profits. But I think for me, the Capital Alliance has been a good investment in that way, in terms of like it's like one of those rare things that I did end up saying yes to and making the
Yeah,
investment.
yeah. For me, I mean, I agree with you. I guess where I was always like too careful with, I
Yeah,
wouldn't invest in almost anything, and then it turned out that relationships and insights and like that saying of like you become the average of the people you spend time with,
yeah,
and like you could spend a lot of time trying to create that group, or you could just like parachute in and basically start participating. And then I have this other idea of like the surface area of luck. I seem to keep getting lucky because I keep having these sort of like surface area like increases just by being around good people, basically.
yeah.
And that
There's a
can
lot.
happen in multiple places. Obviously, that's one of the reasons we all go to Omaha too.
Right. Yeah. No, I think there's a lot. I think there's a lot to be said for that, and probably, especially investment managers who don't have a big team, and they're kind of doing their own thing, like maybe with like one or two sports staff, whatever. Like, yeah, just increasing that surface area. It's probably never a bad thing.
The last thing I want to touch on is, a lot going on in U.S. markets. Obviously, AI is all the rage, for good reason, right? We all use it. Probably a topic for a different time, but what any thoughts on what's happening with, I mean, you've seen anything AI related lately. It's been the Microns and the SanDisk type companies, the chip makers, anything with chips. This is companies that have gone in a year up like 10x, 20x.
Yeah.
Bloom Energy is another one in the energy sector. So there's where are the opportunities in what's happening right now, more on the short side or
I mean,
where?
yeah, it's we have tried to mostly stay away from things that are like super directly AI related on the short side, except where we think that like the 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 AI like washing is like just completely fraudulent. Like Micron, it's like, well, their business really is being affected by AI. But
Yeah.
there's like on the other hand, there's companies where they have like a crappy little consulting business, and they're trying to like slap on an AI label, and then the stock goes up like 5x or something, but it's not really real. Like those I think are the short opportunities people should look at. Or I mean, I don't know, the other thing I've been poking around, potentially I haven't pulled the trigger on this yet. Feel free to, if people feel differently, feel free to send me your thoughts on it. But I mean, Intel is up like 5x, and I mean, there will be gains to like the number of CPUs that need to be sold, um as people are like running more agents and things. But I don't know if I'm convinced that that should be adding like $400 billion to Intel's market cap, given how much given that at the end of all this they're still going to be behind TSMC like significantly. So
But TSMC is like $1 trillion company now, right?
but CFCs are short. Yeah, but Intel, the market cap of Intel is like halfway there. The market cap, like the market cap of Intel
Is
is,
it 500 billion, really?
yeah, dude. You go look at the chart of this thing, man. But the market cap of Intel is like is I believe over $500 billion right now.
Well, thanks for coming on to the podcast. It was great to have you,
Yeah.
and appreciated you taking the time.
Yep. Thank you so much, Ken. Appreciate it.
See you later.
Bye.
Thanks for watching this episode. Click the screen to catch our past episodes with Asif Surya and Matthew Peterson. And to apply for the Capital Alliance Mastermind, hit the first link in the description.